Hi, Dean Jenkins with FollowMeTrades.com, and this is the weekly market update for the week of October 15th, 2017. I'm showing the daily chart of the S&P 500, and boy, it just grinds on, doesn't it, into some very minor new highs this last week. If we can look here at a 60-minute chart and see that grind just a little more clearly, you can see really for the last week or even a little bit more, it's been pretty much in a sideways channel with just some very minor new highs coming in. Definitely different than the momentum we saw late September, early October, and now it really is almost in a channel, but just again grinding out new highs and definitely losing momentum. So I think we're poised pretty quick here for at least a short-term pullback. Now, this may or may not be the beginning of the correction, but it definitely looks like we are poised for a short-term pullback just based on previous cycles and normal market movement. And if we were to get a short-term pullback, the expected range, and I'm looking again at the 60-minute chart, every bar is an hour, down to about 2502 to the bottom of that range, about 2470. So not a huge pullback percentage-wise, but a healthy one that we can definitely profit from and trade on shorter term trades, that we would be in for a handful of days to a week or two. And you can see these pullbacks that the S&P has had prior are in that kind of magnitude, not a change to the uptrend. And I had been watching these time cycles about every 6 weeks. We've gone beyond what we saw the last 3 times, but the one before that was a little bit longer before we got the pullback, so maybe that's what we're looking at here. We do have a bit of a reversal forming already at the end of last week, so I believe we are going to get at least a short-term pullback similar to some of these that we've seen in the uptrend, again in the short term. In the longer term, I believe there is a correction coming, a bigger correction. And here's an interesting article from Goldman Sachs, and they say there's an 88% chance we're heading into a bear market, and they go on to explain that and talk about within the next 24 months. And they've got some super interesting indicators. First, here's this nice chart, it's kind of a scatter chart, showing where we're at in terms of the current bull market and how it stacks up against previous bull markets. And this is the second longest in terms of month, which is on the x-axis here, and in terms of real return on the y-axis here. So the only bull market in the history that's been bigger was the dot-com run up from 1990 to 2000, and we know that correction was pretty substantial. So in terms of time and total return, second biggest bull market of all time. That's really interesting. Goldman Sachs has a unique indicator called their GS Bear Market Risk Indicator, and as this indicator has peaked, it has predicted a bear market, a correction. It did it in 2000 for the dot-com bust, and it did it in the 2007-2008 financial meltdown. And look, we're at pretty close to the levels where it began predicting a pullback. So they're saying about an 88% chance of a correction coming, and they're saying within the next 24 months. And I think I agree with that. Now, it's nothing to panic about, and it's not doomsday talk. That's just normal market cycle. And again, I think we're getting a short-term pullback. We don't know whether this will be the beginning of the big one that Goldman Sachs is talking about. We do have something tradable coming up here, and we'll trade it when the realities are present. The idea that it would pull back now is a thesis, unproven as yet. We'll know what's happening when we start getting lower lows, lower highs on that shorter term 60-minute chart that I showed earlier. So we're watching for it. When it's proven, we're going to be taking some trades against it. And then when the big one begins, there's going to be a lot of profit to be made, but we're a long way from that being proven yet. So that's just a quick look at the S&P 500. Again, I think we're getting a short-term pullback coming probably in the next week or so, maybe starting this week. Again, we got a loss of momentum and a kind of a historical cycle here, even in the uptrend, and then longer term, of course, waiting and watching for the bigger pullback. Let's go ahead and take a look at gold, as we always do each week. So I've been saying for a while that I thought gold was bullish, We smashed up through the 1307 level, pulled down to the bottom of the Ichimoku cloud, and reversed back up. Now, it will more than likely continue to be volatile, but we're in an uptrend. We're in the definition of an uptrend with a big high, higher low, heading up to highly probable new highs. We're long gold, and we're trading this. We're pretty happy with it, and we're staying with it. It won't be a smooth ride. It won't go straight up, but overall up. Same thing with oil. Oil is in an uptrend. After most of the year being in a downtrend with lower lows, lower highs, we started putting in, a high, didn't go down, putting a new low. This is a higher low, new high, pulling back. We're long oil, and we think oil's going longer too. And there's some oil-related stocks that we believe are doing well, and we're long on those. So, yeah, we think short-term pullback in the indexes, led by the S&P 500. Bullish on gold, bullish on oil. And that is the update for this week. I welcome your comments, your feedback, whether you have questions or just want to comment. Agree, disagree, love to hear from you. That's the update for this week. Thanks.